Hey folks, welcome to a product review at Finominal. Today we're going to analyze T. Rowe Price's All Cap Opportunities Fund. Now, as per its name, it's supposed to focus on opportunities across all market cap segments in the US, but it does have a growth focus from a stock selection perspective. The fund manages around $15 billion and that share class charges 66 basis points. So let's start with a benchmarking analysis. Now, the fact sheet of PNAIX does state the Russell 3000 index as its benchmark, but we do know that there is a slight large cap bias, and we can also see that the suggested benchmark is the Russell 1000 index. Now, we could run with that as a benchmark, but I also know, as mentioned by reading the fact sheet, there's this growth focus. So what I'm going to do is I'm going to actually use the Russell 1000 growth index as a benchmark. And if you look at this from a stats perspective, R squared, tracking error, correlation, they're all very similar between Russell 1000 and Russell 1000 growth index. Having said that, from performance perspective, we do see the performance of PNAIX here from 2015, 16 onwards. Compared to the Russell 1000, you do see that it has beaten that handsomely. But we also do see that the excess returns to the Russell 1000 index, i.e. the yellow line, were minor. And over here, we can look at the excess return chart. We effectively see that the excess returns compared to the Russell 1000 growth index have been zero over, well, almost 10 years. If we do want to look at the overlap in terms of the fund versus the Russell 1000 growth index, where we're using an ETF as a proxy IWF, we see PNAIX has 101 stocks in its portfolio, compared to 399 for the Russell 1000 growth index, and there's an overlap of 58 stocks, or 45%. And that's quite high, 45%. That equates to an active share of 55%, which is on the lower side. But we can look at that a little bit more into detail when we are going to review the alpha generation. Before that, let's have a look in terms of what has been driving the returns of this fund. And as mentioned, we're going to do it relative to the Russell 1000 growth index and going to focus on the factor betas. So compared to this kind of like large cap growth index, the Russell 1000 growth index, we do see there's been a kind of consistent positive beta to the size factor, meaning that PNAIX had slightly smaller companies in its portfolio. We also see that there's a negative consistent bias to the quality factor, so they were like a little bit lower from a quality aspect perspective, but the exposure to kind of value, momentum, and even low volatility has been time varying. And perhaps that simply reflects the nature of the fund manager in terms of not having a certain style. Now, if you look at this from an alpha perspective, we do see that this fund has outperformed in 4 out of 10 years and generated alpha in 8 out of 9 years, which is pretty good. As mentioned, active share 55%, right? Which of course increases your fee quite significantly, the active fee. Having said that, if you do look at the alpha generation, although alpha was generated consistently, you can see the alpha since 2016 is quite small, and that almost all the returns can be simply attributed to the stock market overall or that index. And so stated differently, this is what I mentioned at the beginning, you could consider this fund as a kind of core equity fund. It's moderately diversified. It's a good proxy to the stock market, highly correlated. So that's how you can look at it on a standalone basis. Now, in terms of looking at PNAIX compared to peers, what we've done using our asset comparator tool, we've selected 4 other funds, one from Vanguard, First Trust, Sharpe, and Invesco. They're all large cap or even mega cap growth funds. And let's first confirm that they are relevant peers. And what we're going to do is look at the current portfolios via holding space factor exposure analysis. So over here we see, and let me change the benchmark so that we're consistent to the Russell 1000 Growth Index. So over here we see effectively those 5 funds on a variety of metrics. We can look at them from a valuation perspective. They're all on the expensive side. They're all larger in terms of market cap. They have all similar growth prospects as the Russell 1000 Growth Index. Kind of like slightly positive momentum, less volatile, is like relatively close together from quality perspective. Now, when you do a peer selection process, effectively we want to make sure is that these dots are close to each other. They're not going to be also on top of each other, but close to each other, so that the funds, the fund managers pursue the same investment styles. And that's the case in this example. Now, let's move on to performance. And we do have the performance since 2016 for those 5 different funds. And what you can see effectively is that 3 of them, which includes PNAIX, as well as the kind of Vanguard mega cap product and the Invesco large cap growth ETFs, sorry, not the Invesco one, the what is the other one? The Schwab one, have effectively created the same total return. As you can see, after, well, as mentioned, almost 10 years, you have almost the same return of those 3 products. The other 2, the Invesco one as well as the First Trust one, have performed worse than those ones. Now, from that perspective, you could say, why should I invest in PNAIX, right? And I could easily take that product from Vanguard or the product from Schwab. And actually, from a cost perspective, PNAIX is the most expensive product. It's 66 basis points. You could look at the Vanguard product, it's 7 basis points, or the Schwab one, 4 basis points. Having said that, we do have to give PNAIX credit in the sense that it managed to keep its volatility lower than all of the other products and offered a similar return, effectively resulting in a higher Sharpe ratio than the peers. So, and that kind of summarizes our review of T. Rowe Price's All Cap Opportunities Fund, that it's from a return perspective has done very similar to the Russell 1000 Growth Index. There's no alpha there. You can look at peers like the Vanguard product or the Schwab product, and you get the same return. It is expensive, but it also generates the highest Sharpe ratio. And you have to give them credit for, well, I guess, a better risk management or stock selection process there. That's it. Hope that helps. Have a nice day.